estate investing is not cheap. So how do you afford to invest in real estate and, also support a family and maybe send your kids to college one day? Well, guess what? What a lot of people don't tell you is that the best returns in real estate investments are not in those prime markets like luxury Midtown Manhattan markets or Laguna Beach markets, downtown LA. That's just not where the good solid returns are for most real estate investors. They're actually found in Class B and Class C properties in Class B and Class C neighborhoods. What are those? Well, guess what? In this video, I'm going to teach you how to identify exactly what those wonderful investments are. And the best part is they're pretty much recession resistant. That's right. When the market tanks, like it does in every market cycle, your real estate investment will continue to provide you equity and return, unlike most other real estate investments, because you identified that recession-resistant investment and you didn't have to break the bank to do it. Welcome back to Confident Real Estate. I'm your host, JC. I'm going to tell you right now what Class A, B, and C neighborhoods look like and what Class A, B, and C properties look like. But before I do, you got to do me a favor and hit that like button for the YouTube algorithm, because you know that's how this thing works. And of course, if you're not yet part of this Confident Real Estate family, smash that subscribe button and join us, because guess what? We're here to give you free information that will only benefit you. So you have nothing to lose by clicking that free like button and that free subscribe button. Okay, Class A, B, and C, properties and neighborhoods. Class A, well, you could probably imagine what Class A is. A is normally deemed the best of anything, of something, right? You get an A in school, well, that means you're at the head of your class. Class A neighborhoods and Class A properties are no different. A primary market, like Midtown Manhattan, a brand new luxury top to bottom, marble bathrooms, marble countertops in the kitchen, state-of-the-art smart tech home. That is a Class A property. If you're going to build a new construction property as a developer, it doesn't pay to build anything other than a Class A property, because it doesn't cost much more than building a Class B property. And let's be honest, your property value is going to be worth a lot more when you go to refinance after you're done building the property with your construction loan. So that's what a Class A property is. And obviously, and of course, it is very expensive to build a Class A property, and of course to then come in and buy a Class A property. So if you're a new investor and you don't have millions to spend, get rid of Class A property. Check that off your list, maybe down the road when you build your portfolio up. But quite honestly, I don't like Class A properties. Unless you're doing new condo development, which is a whole nother animal unto itself, Class A properties are not something you should be focusing on. What you should be focusing on are Class B and C properties. And I did a video a while back about the ripple effect of real estate investing. Imagine you throw a pebble into a totally still glass-covered lake. You just throw that pebble in and you watch the ripple break the stillness of the lake. The center of where that pebble landed is your primary market. That's your Midtown Manhattan. As the ripples expand outward, that next ripple out is your Class B market. That's for people who can't afford to live in the middle and heart of it all and have to actually commute in from an outer suburban or urban area that's outside that primary market. That is where you find a Class B neighborhood. A Class B neighborhood may also have Class A luxury properties for people who want to feel like they're living in a wonderful, luxurious property, but they can't afford the location that a Class A neighborhood provides. So instead of living within walking distance of those Broadway shows and Times Square, they're living, I don't know, in outer section of Brooklyn or Queens, if we're using the New York City example, but they're still living in a wonderful townhouse or condominium, some kind of house that's beautifully built, top of the line, everything. That's a Class A property in what's becoming more a Class B neighborhood. That next ripple ring out is your Class C neighborhood, where maybe prices dip even further and you have people that can't afford Class A neighborhood in the center of it all, and they can't afford to be in a Class B neighborhood in those outskirts surrounding the center of it all. They have to be a little bit further away. They need that maybe hour or more commute into that prime neighborhood where they work and spend most of their time. They can't afford to live there. Maybe they have a family with kids and they want some room. You're not going to find room in that densely populated primary market unless you got big bucks to spend. So they're in that Class C neighborhood. Now, what's a Class B and a Class C property? Well, you can probably figure that out. A Class A is super luxurious. A Class B, slightly less. Class C, even a little bit more. Usually, if you're a real estate investor, you're going to go out and look for a Class C property in a Class B or C market. Those are those dated properties that when they were built were beautiful, but time has passed them on. What was beautiful back in 1980 in new construction, maybe not so beautiful in 2021, right? So you're going to go buy those properties that maybe only need cosmetic upgrades, not structural, very expensive upgrades. That's why we do house inspections. And of course, I'll leave a link to the video we did on how to do your inspections and get contingencies in your contracts down below in the description of this video. But that's where a Class B and C market is, and that's what a Class B and C property are. You want to stay away from Class D properties. Class D properties are where you have things like rent control, horrible tenants, things are breaking, the tenants destroy the property, and they're in markets that you wouldn't want to walk through at night, late at night. Those are Class D markets and what Class D properties tend to look like. You really want to focus on Class B and mostly C properties in those Class B and definitely C markets, because that's where you're going to get the biggest return on your equity. You go in, you buy something, you fix it up, cosmetic upgrades, you will always have people renting that property. Why? So why are Class B and C markets much better investment opportunities than Class A markets? Well, we're always in a market cycle. There's a peak to the market cycle and there's a bottom to the market cycle. But we're always in a cycle at some stage of the cycle. If you don't understand what I'm talking about, again, I'll leave the link to the video down below that I did that covers how market cycles work. And you really need to understand those before you do any kind of investing in any type of investment. But when there is a bottom out of a market cycle, when things start to go on a decline, there is always going to be a full segment of people who are striving to be in that Class A neighborhood and in that Class A property group. Maybe they were living a little beyond their means. Then there will be a whole segment of people who have families to support, and maybe they go from 2 incomes to 1 income during that down part of the cycle because somebody loses a job. Those are the types of people that will no longer be able to live in a Class A neighborhood or a Class A property, even if they're in a Class B neighborhood, living in a Class B or a Class A property. Things will start to become a little tight. And as you know, it's a domino effect, and unfortunately, things trickle downhill. So for you, if you've invested and own a Class B or C property in a Class B or C area, you're always going to have people that suddenly need to tighten the purse strings and fall back into something that's a little bit more affordable for their housing needs. And that's where you come in. And that's why these Class C especially and Class B properties in those Class B and C neighborhoods are pretty much recession resistant. So how do you find these Class B and C markets and you know you're in the right area? Well, look for the 3 factors of income growth, population growth, and employment growth. Look in those primary areas where those 3 factors tend to be. If there's, let's say, major hospitals or a courthouse or some big employer that's in that area, things that aren't likely to change. Don't look at where the doctors of that hospital live. Look at where the nurses and administrative staff live. Don't look at where the judges and top attorneys going to the courthouse live. Look at where the court officers and paralegals live. Those are going to be those working class communities that tend to be more Class B and even Class C markets. And that's where you want to invest, because there is always going to be some form of population in that area And if the jobs continue to maintain themselves and be consistent, and always check that census data, well, guess what? Then there's always going to be some form of population growth, job growth, and income growth, especially if other businesses tend to populate around those key factors like schools, hospitals, and courthouses. And of course, other major industries that are out there. I hope you found this video useful. I hope you got something out of it, some great information, because quite honestly, real estate investing can be very simple if you know what to look for. There are tons of opportunities out there. The difference between you and the next guy is that a lot of people just don't know how to spot the opportunities. If you educate yourself to spot the opportunities, you will always find a way to make great returns and keep making that money and building your portfolio. Again, thank you for watching all the way to the end. Hit that like button if you didn't already. And of course, please hit subscribe because it's free to do it and it's free information. And I think we're giving out some real valuable information here. I hope you feel that way too. As always, I appreciate you watching to the end. Until next time.